Something crazy just happened in the crypto space. We got a big update from Wu Blockchain regarding an update regarding account monitoring, with Binance founder CZ unfollowing Solana co-founder Tolly on January 31st. Earlier the same day, Tolly reposted an article in which the OKX founder criticized Binance. Previously, some community members had suggested that Binance as a platform should treat all ecosystems equally rather than primarily prioritizing BNB chain. Now, the repost in question is this one. And yes, it got written by *_OKX, the founder and CEO of OKX. Now, we have here recovery is just 18 months after a crash. We're talking about 18 months after October 10th. Because we're now starting to see a lot more insights regarding October 10th. So we have over here from Star. Okay, they break down October 10th. There's two posts in question here. The first one is from Binance, which has earned 12% APR with USDE on Binance Earn. Hold USDE to get daily rewards, trade anytime, and use as collateral. Now we have over here, USDE has hit $600 million on Binance just one day after announcing 12% APR. This showcases the huge growth potential for USDE as it can tap into the distribution power of the world's leading exchange in both spot and perps, and with over 280 million users worldwide. 1 billion on Binance inevitable. Now, this got posted on September 23rd. If you were here for Luna, the collapse around Luna and UST, then you already know why this is a concern and how big of an issue this can be. Let's go back to the top real quick. No complexity, no accident. 1010 was caused by irresponsible marketing campaigns by certain companies. On October 10th, tens of billions of dollars were liquidated. As CEO of OKX, we observed clearly that the crypto market's microstructure fundamentally changed after that day. Many industry participants believe the damage was more severe than the FTX collapse. Since then, there have been extensive discussions about why it happened and how to prevent a reoccurrence. The root causes are not difficult to identify. What actually happened? Number one, Binance launched a temporary user acquisition campaign offering 12% APY on USDE while allowing USDE to be used as collateral with the same treatment as USDT and also USDC, and without effective limits. Number two, USDE is a tokenized hedge fund product. Athena raises capital via a so-called stablecoin, deploys it into index arbitrage and algorithmic trading strategies, and tokenizes the resulting fund. The token can be then deposited on exchanges to earn yield. Sounds sustainable, right? USDE is fundamentally different from products such as BlackRock's BUIDL and Franklin Templeton's Benji Fund, which are tokenized money market funds with low risk profiles. USDE, by contrast, embeds hedge fund level risk. This difference is structural, not cosmetic. Number four, Binance users were encouraged to convert USDT and USDC into USDE to earn attractive yields without sufficient emphasis on the underlying risk. From a user's perspective, trading with USDE appeared no different from trading with traditional stablecoins, while the actual risk profile was materially higher. Number five, risk escalated further as users converted USDT and USDC into USDE, used USDE as collateral to borrow USDT, converted and borrowed USDT back into USDE, and repeated the cycle. This leverage loop produced artificial APYs of 24, 36, and even 70% plus, widely perceived as low risk simply because they were offered by a major platform. Systemic risk accumulated rapidly across the global crypto market. 6, at that point, even a small market shock was sufficient to trigger a collapse. When volatility hit, USDE depegged quickly, cascading liquidations followed, and weaknesses in risk management around assets such as Wrapped Ethereum and BN Sol further amplified the crash. Some tokens briefly traded near zero. The damage to global users and companies, including OKX customers, was severe, and recovery will take time. Now, I will say this. Considering the fact that OKX is a competing exchange, is all of this 100% accurate? Well, we know that Binance definitely was a major, player within this collapse. And we also know that, yeah, this is accurate. There was a lot of tokens on Binance that traded near zero, like Atom, for an example. A lot of people from the space knew this that day, and they even posted about it. So yes, this is accurate. Why all of this matters? I'm discussing the root cause, not assigning blame or launching an attack on Binance. Speaking openly about systemic risk is sometimes uncomfortable, but it is necessary if the industry is to mature responsibly. Again, I actually think that this is a very good way to go about this. Not pinpointing blame or anything like that, but exposing a very big concern in the space that's led by the largest crypto exchange globally. I expect there may be significant misinformation and coordinated FUD directed at OKX in the near future. Even so, speaking honestly about systemic risk is the right thing to do, and we will continue to do so. As the largest global platform, Binance has outsized influence and corresponding responsibility as an industry leader. Long-term trust in crypto cannot be built on short-term yield games, excessive leverage, or marketing practices that obscure risk. And I agree. The major issue right now in crypto is that we are running on thin liquidity while everyone is leveraging, 10, 20, 50, 100 plus X. I mean, it just leads to a liquidity cascade causing prices to drop severely, which we are used to seeing now. But it just feels a lot worse now because we're not really getting anywhere in terms of upside price action. It's basically just us chopping. All of a sudden, mass liquidations happen and we just drop. But on top of that, we have the industry needs leaders who prioritize market stability, transparency, and responsible innovation, not a winner-take-all mentality where criticism is treated as hostility. Crypto is still early. What we choose to normalize today will determine whether this industry earns lasting trust or repeats the same mistakes again. Now, this led to, number one, Binance putting out a full official response to the statement. And essentially, they tried to blame Ethereum for October 10th. They said that the flash crash was blockchain congestion on Ethereum, which caused gas fees to spike from single digits to over 100 at times and delayed block confirmation. Slowing arbitrage and cross-platform flows. In an already thin market, this widened spreads and made position rebalancing even more difficult, creating a brief liquidity vacuum that amplified price swings. Until selling pressure eased and markets stabilized, it was difficult to rebalance between exchanges or to deploy liquidity where it was most needed. I really don't think that this was the case. I really don't think that this is the case. I feel as if this is just damage control at this point. And what's crazy about this is like CZ went on a massive tangent on X. He said word of the day, and he said, see how many complainers are from accounts you don't recognize. Most of them are new accounts with low followers. While we are not perfect, we spend time on improving ourselves. Let them spend their time on us too. Now we also have over here just a breakdown of FUD. I'm not going to go over all of this, but he did turn off comments for the post to identify critics among his followers. It's just interesting to me that we are constantly saying oh, this is FUD, that's FUD. But we already know on 1010 that Binance was a major player behind the cascade. We know that they were, one of the key players that caused it. And let's not forget that CZ did get pardoned recently back in October. But prior to that, there was a lot of wash trading on Binance. There was a lot of, very suspicious activity on Binance throughout the years. If you've been in crypto since going all the way back to 2016, 2017, Binance at one point in time was one of the shadiest, exchanges in the space. But the good thing about Binance at those times was the fact that they were listing micro caps that would just explode 100x. Today, it's a little bit more of a different story. And the reason why I say that's a little bit of a different story is, well, let's go over here real quick. We have here, people wonder why CZ Binance is getting a lot of hate lately. It's simple. Everything that Binance touches since he's out of jail is down only, not a single outlier, all down more than 80% on average. That together with the insane amount of non-selling while calling Supercycle shake my head. Now, yes, if we are looking at this is the median performance of Binance future symbols listed in 2025. everything is down more than 80+% since they got listed. This is the median performance, by the way. So if we're looking at this, majority of all of those future listed symbols are all down. Now, the main issue with Binance is the fact that they charge absurd fees for any listing on their exchange. And typically a lot of exchanges, when they list a token and they are granted like 50% of the supply or more, they just start selling in waves when the liquidity is ripe, which causes most of the buy pressure to turn into sell pressure, because again, that supply quickly outweighs any buying pressure, especially in a very weak market to begin with, and one that is low on liquidity. So all of these new launches, they were destined to have a massive downward swing, but this is just insane to me. Now, yes, it's at the same exact time that we are constantly hearing about a super cycle. We know recently that, CZ was at Davos calling for a super cycle. But on top of the super cycle calls, Binance traders are all selling Bitcoin. They've been selling Bitcoin for months on end, since going all the way back to October. This is in massive waves. We're talking about roughly almost $16 billion worth of just sell pressure from Binance alone. This is all on chain. You could all track all of this. Now, what's interesting about the statement that CZ made, which it wasn't CZ, because again, CZ is not running the show anymore at Binance. He has retired. I think that the big issue here is that everyone is still, targeting CZ, and he does make it easy because, he's constantly, acting as if he still works at Binance. He's still a big supporter of Binance and BNB and things like that, because again, he did build this. But the main thing that we are looking at here is the fact that Binance, they put out this statement regarding this congestion with Ethereum. A lot of big players from the space have been saying that, this is, a deleveraging, time where everyone was deleveraging. There was $28 billion worth of Bitcoin deleveraged that day, which caused heavy losses. There's also glitches and, a code error. There's been so many different things that people are clinging to. Kathy Wood here is saying that there was a Bitcoin deleveraging event, but it was triggered by a Binance software glitch. Oh, a software glitch. Oh yeah, sure. When you hear things like software glitch or, the funds were misplaced, things like that, 9 times out of 10, there's some hand in the pot making sure that they are making money off of this. This software glitch, I don't believe this idea. Now, we do have a few people from the space supporting Binance. Kind of wish public figures would pick words more carefully. 1010 was very obviously not a software glitch. It was a flash crash on mega leverage market on illiquid Friday night driven by macro news. And since we are here, I get that nobody likes being in a bear market, watching every single asset, class besides crypto going up. Finding a scapegoat is comfy, but blaming this on one exchange is intellectually dishonest. Now, I will say this. I don't think that it was just one exchange. But when you have one exchange cause a liquidity cascade, it bleeds into the entire market. So yeah, although it wasn't just one exchange, that one exchange led to multiple exchanges having major liquidation alerts get triggered, which immediately turns to, automated sell pressure hitting the market. Because again, a lot of these exchanges have backstops. They have market makers to backstop losses if there's a significant cascade in the market, which also accelerates price, action in a negative way. So I do think that it's easy to blame Binance in this case. I think that it really is just one exchange that really did cause a lot of the damage that day. Now, I'm not the only one who thinks this, because we also have over here from Matthew Siegel. And if you guys do know, Matthew Siegel was one of the individuals that did talk about XRP in a negative way. He's the head of digital asset research at VanEck. I know that a lot of people don't like him because of that. However, this statement here is true. He said, come on, nobody even remembers the macro news because it didn't matter. And it didn't. During October, there really wasn't that much negative, macro news. Stocks were up the next day and shortly thereafter at new highs. Are you saying there was no vulnerability in Binance's systems that caused the depeggings and contributed materially to the washout? And yeah, I'm right there with them. I really do think that there was a vulnerability in Binance's systems. I think it's perfectly outlined by Star. Regardless of if this is another exchange that's competing with Binance, this is 100% true. Like, there was a major issue here, and you don't need to be a rocket scientist to look at this and say, this is basically the same issue that happened with Luna. The difference with Binance and Luna, though, is that Binance has a ton of capital to back the losses that were liquidated and wiped out. Luna was a little bit more of a different situation. It completely wiped out the entire back funds that they had to, back any sort of major issue that, happened. But it just completely wiped out any capital that they had. And also, if we're really thinking about the Terra Luna situation, I feel like there was definitely a lot of fraud mixed in there as well. But regardless of that, we go back over here to, that post, because I really do think that the macro events during that time are just ridiculous. Like, to say that, the macro events led to this massive sell-off, Matthew is 100% right. Like, most of the markets bounce back. If you actually look at the markets list where it's crypto compared to stocks, to gold, to silver, to every market, every other market jumped to new all-time highs after that crash besides crypto. October 10th absolutely killed all momentum in crypto. In fact, I think that it harmed the overall view of crypto. I think that a lot of people were terrified to jump back into crypto because of what happened on the 10th. So, yeah, I don't care for the idea of like saying, oh yeah, we're in a bear market. Sure, you could say that. I would agree for the most part. But the main thing that I'm looking at here with this is that 1010 completely killed all of crypto's momentum. We were trading at all-time highs. Things were still looking pretty good. And then all of a sudden 1010 happened, wiped out sentiment, wiped out momentum, wiped out a ton of liquidity. And since then, we've been trying to build back to that point. But it's been a challenge because, again, liquidity is so thin to begin with. So at the end of the day, this is definitely a very big issue. Binance needs to solve it. I think that we need to learn our lesson from this. A lot of people hate Binance at this moment. A lot of people are calling for, fraud and, wash trading still and things like that. And although, yeah, that definitely could still be a possibility, I feel like a lot of, these top tier exchanges now have to adhere to regulations because there still is regulations on these exchanges in certain key areas. So I'm not too sure on the facts there, and I don't care to speculate on, if Binance is committing fraud or anything like that, because I'm not going to go through every single on-chain wallet to find fraud. But I will say this was definitely a big issue that was on Binance's side. Like, this is a lot of the weight of what happened on 1010 is on the shoulders of Binance. I don't care what CZ says. I don't care what any, Binance supporter says. This was majority caused by Binance. And it was just all caused by an issue that we know has been around for years because of Luna. So we do need to do better. We need to do better. We need to learn from these mistakes, especially with like what Star is saying. If we want this space to be taken seriously, if we want to see mass adoption happen, we need to solve these issues. So with that being said, I hope that you guys enjoyed this video.